For years, the name Austin was synonymous with a real estate frenzy. Bidding wars, cash offers, and properties selling in days defined a market that seemed to have no ceiling. It was the poster child of America's pandemic housing boom. But in 2025, the music has stopped. The tide has turned. Welcome to the new Austin housing market. This is the Austin Real Estate Report for October 2025. Part 1. The Great Reversal. The data paints a stark picture of a market in correction. According to real estate firm Redfin, a stunning statistic emerged in May. Nearly 14% of all Austin home listings were at risk of selling at a loss. But that risk is not evenly distributed. It's concentrated heavily on a specific group, those who bought at the peak. Redfin estimates that nearly half, 47.5%, of for-sale homes in Austin that were bought in the last 3 years are at risk of selling at a loss. That's the highest share among all major metropolitan areas in the country. Drill down further, to the throes of the pandemic between July 2020 and July 2022, and the figure is still alarming. 32.2% of homes bought during that period might now sell at a loss, a figure second only to San Francisco. This, analysts say, points to the comparatively enormous bubble that formed around Austin during the pandemic, and how it has now popped. But there is a silver lining for long-term homeowners. If you're selling an Austin home that you bought before the pandemic, the same Redfin report states there's just a 0.5% chance that you sell at a loss. The median sales price for an Austin area home in June was $449,000, roughly the same as a year earlier. But with prices softening from their peak, sellers are now in a position where they may need to choose between accepting a lower price or taking the home off the market. The era of unconditional seller power is over. Part 2, From Boom to Balance, the birth of a buyer's market. So, how did we get here? The pandemic boom was fueled by a perfect storm. Remote workers and tech transplants, freed from their offices, flocked to Austin for its lower cost of living, no state income tax, and vibrant culture. Tech giants like Apple, Google, and Meta expanded their presence, drawing in high-income earners. The demand was insatiable, but what goes up must come down. The pendulum has now swung. According to Realtor.com, Austin is now one of 7 of the 50 biggest metros to have officially shifted into a buyer's market. The key metric? Inventory. A balanced housing market typically has a supply of 4 to 6 months. A buyer's market often begins around 6 months of inventory. Austin currently sits at 7.1 months of supply, up 2.8 months from just last year. This compares to a national average of 5.0 months. Active listings in Austin are up 20.1% year over year, and are now a staggering 50.2% higher than pre-pandemic levels. Only Denver and San Antonio, among the top 50 metros, have seen a similar inventory surge. Homes are also staying on the market longer, giving buyers crucial breathing room. The average home in the Austin metro now takes 68 days to sell, but this varies dramatically by location. In zip code 78719, homes sell in a blistering 15 days on average. Meanwhile, in zip 78948, they sit on the market for an average of 192 days. For buyers, this shift means more choices, greater negotiating power, and a chance to enter a market that had seemed completely out of reach just 2 years ago. Part 3. The data on the ground, prices, affordability, and regional trends. With increased supply and cooled demand, prices are retreating. Since their peak in August 2022, Austin's median list price has fallen 13.2%. More recently, median list prices per square foot are down 3.5% year over year. This is driving a significant improvement in affordability. The latest Realtor.com affordability score shows that Austin's Metro score climbed to 0.60 in June 2025, up from 0.51 a year earlier. This improvement is fueled by a 4.5% decline in the median listing price, now at $499,000. While still above the national median, Austin is becoming more approachable. Let's break down the Central Texas region as of August 2025 according to the Unlock MLS and Austin Board of Realtors. For the Austin Round Rock San Marcos Metro as a whole, the median price was $444,490, up a modest 1.3% year over year. There were over 14,220 active listings, but look closer, and the story varies county by county. In the urban core, Travis County, the median price actually rose 4.4% to $525,000, even as home sales dipped. In Williamson County, median prices dipped slightly to $425,000. Hays County saw a 3.4% price drop to $369,000, and the most dramatic corrections are in the outlying areas. Bastrop County median prices fell 16.6% to $366,000, and Caldwell County saw a massive 24.1% year-over-year decrease, with the median sales price plunging to $227,750. New construction is also playing a major role in this new market. Nearly a quarter of all for-sale listings in Austin are newly built, compared to 17.3% nationally. And in a striking reversal of the national trend, these new homes in Austin are listed at a 7.2% discount compared with existing homes. Part 4. Beyond the single-family home. The cooling trend isn't limited to the for-sale market. The rental market in Austin is also favorable for consumers. As of July 2025, the median asking rent for 0 to 2 bedroom units is $1,460, 5.3% lower than a year ago, and well below the national median of $1,712. The data also reveals shifting migration patterns. Online traffic shows that 39.9% of shoppers looking for homes in Austin are local, while a significant 60% are from elsewhere. Dallas tops the list of inbound interest. Conversely, 59% of Austin-based shoppers are themselves looking outside the metro, with San Antonio, Dallas, and Houston among the most popular destinations. Part 5. The bottom line. So, what does all this mean for the future of Austin real estate? The experts are characterizing this not as a crash, but as a necessary and healthy correction. Vico Grady, a research advisor at Unlock MLS, calls it a gradual adjustment. She notes, the median sales price has held steady, underscoring ongoing demand and reinforcing long-term confidence in the Austin market. The president of the Austin Board of Realtors, Brandy Wuyench, states that Central Texas is heading towards a steady and balanced market that will present opportunities for both buyers and sellers. She adds, the market has adapted to today's interest rates, which means success now depends on how consumers position themselves, not just on rate movements. The bottom line is this: Austin's housing market is offering buyers something they haven't seen in years: leverage. The fever dream of the pandemic boom has passed, replaced by a more rational, balanced landscape. The city's long-term fundamentals remain strong, but the era of runaway prices and unconditional seller advantage is, for now, a chapter in the history books. The Austin Reset is here.